This is Professor MoneyPigTrading. Today is April 4th, 2021. So happy Easter, everyone. And if you're watching from Philippines, I know there's a lot of YouTube audiences from there. Gumusta. And today we're going to talk about Amazon. And the bullish season is actually coming. Potentially there will be 3,500% return if we use option trading. So just really quick, we're not registered financial advisor. This is just education contents. And also derivative tradings are highly risky, even though it's high reward. So please invest out your own risks and make sure you do your own homework. And today we're going to talk about, in the past 10 years, Amazon actually moved out on average 22% every single year between March 29, which is around the Easter time, and July 20th. There's 100% reliable seasonality. And if such amazing trading setup, let's take a look at what's going on with Amazon on the daily chart. And we can see in January actually report the Q4 2020 earning results and had really amazing earning results. Reported $14 earning per share, which is way outperformed the Wall Street consensus $7 earning per share, which is very similar to our prediction that we provide to MoneyPigTrading communities on Discord. And however, once that amazing earning report was released, actually Amazon only went up after the market hour and actually pushed back down from $34.50 all the way to $29.50. And part of the reason is because Jeff Bezos actually stepped down the CEO. So market had a little concern, but of course we're seeing a lot of month-end weakness that we mentioned in a lot of previous videos, because bank actually reduced the SOMA data. Bank balance, and also we're seeing a lot of roughness in the tech market because of the 10-year treasury yield. So that's why Amazon has had such a big drop. But now it break the daily downtrend, start to sideways consolidate and pick out the momentum again. We can see the TTM squeeze now change the colors, has a 4-day, 8-day EMA cross, starting to push back up. And yeah, we'll see how it goes. But if such a reliable seasonality happened in the past 10 years, why don't we take a look at each year, especially the most prominent years? Let's take a look at 2020, which is last year first. So last year, we know COVID happened. Amazon actually had a really big pushback and into the end of February, and then Federal Reserve started to spray the helicopter money into the market, and we can see a lot of tech stock actually had a really nice push up. Between this Easter time to July, we can see on the right side is a QQQ, which is a tech ETF, actually push up about 45%. At the meantime, Amazon had a clock. It started rally again before earning around Easter, push up, side consolidate before earnings, and then started push back up after the earning results, and side will consolidate before the next earning in summer. And we can see Amazon at the same time actually go up 62%, way outperform QQQ. However, I don't think this year's Amazon rally will be as amazing as last year. Why? Because last year, February was the bottom of the stock market. Federal Reserve started to push a lot of money into the market and push up a lot of stock from the bottom, right? And now a lot of this tech stock have went up so much, and the extent of bank SOMA increase is not as much as 2020 anymore. So I don't expect Amazon to have this amazing 62% rally, in the next 2-3 months. But however, things might change, right? Amazon might release some amazing technology or report crazy, earning results. Then, we might say 62% like last year, but in my humble opinion, highly unlikely. So in our previous videos, we mentioned so many times this year's Amazon results might very similar to 2014, 2015. It's because the whole market situation is very similar to 14 and 15 when the interest rates started to pick up, inflation coming back up, economies recovering from a crisis, right? So let's take a look at 2015 first. That year, the inflation has picked up, interest rate has been increased, tax started to stabilize. We can see Amazon way outperform QQQ again. Starting around the Easter time, Amazon actually pushing back up and report a better than expected earning, push up, and then sideways consolidate until summer, start to push back up again. And we can see in the meantime, QQQ, which is a tech ETF, was relatively choppy throughout the time, even though it still went up 9%. We can see it's way volatile than Amazon. So what about 2014? This figure, just zoom in the Amazon to show you around the Eastern time on the right side. Amazon actually went up quite a bit during the Eastern time before the earning. It went up about 6 or 8%. That's a zoom in of this this time frame on the left side, Eastern time to around mid-April. So what about 2014? So 2014 is actually the most similar year compared to 2021. It's because we can see on the left side is the fast SOMA data between 2014 and 2016. And in 2014 and 2021, this is the whole like holistic view. We can see if we zoom in 2015, the Federal Reserve actually didn't increase Bank SOMA for since the end of 2014. But throughout the 2014, Federal Reserve still gradually increased the Bank SOMA balance, like we mentioned in the previous video. And we can see starting in the end of 2014 all the way to around 2018, Federal Reserve just keep their Bank SOMA account balance remain pretty much unchanged until in 2018 they start to drop it. So let's take a look at Amazon 2014, since that year is kind of similar to what we're seeing this year. And you can see Amazon actually was a little choppy last year. It only went up about 6.9%. Around the Easter time, actually pushed back down, and the earning was not as good as expected. And then sideways consolidate in the summer started to push back up. And in the meantime, QQQ had a really choppy April as well. But however, in May started to pick up the momentum all the way to July, it just went up. In the meantime, QQQ went up in this time period, Easter to summers, about 15%, outperformed Amazon at 6.9%. So one thing I really like about the current Amazon setup is it had a monster 20 Q4 earnings, and currently it's not priced in, right? It actually didn't went up. The price actually went all the way down, and now sideways consolidate. The other key number you should look at is Amazon Wall Street consensus price target since the last earning was upgraded, and the consensus right now is 3943.37. And I think there are about like 20 or 15 analysts rated as a buy right now. So the current price 3100-ish is way below this 3943 level. So how can we play this opportunity? So the first easiest way is to buy Amazon stock, to be honest, even though I know it's kind of expensive. If your entry price at 31.61 at Friday close, and if by April 16 it went up 34.33, it will be up 8%. If by April 16 it tests the all-time high 35.52, we are going to see about 12% of the return. I know Amazon is pretty expensive. The other proxy play is XLY. What you can do is buy it, because XLY is a consumer sector ETF, and its largest holding is Amazon. I don't quite remember the number, but I think it's like 10-20% at least of their holdings are Amazon's stocks. So if you enter at this 169, you can potentially get about similar returns at Amazon, but this stock actually holds a lot of consumer other stocks like Coca-Cola, which is more like value stock. The price doesn't move that much, and also has Nike, Home Depot, etc. So it's really hard to predict the price action of XLY, but it's definitely a good proxy play and a lot cheaper. The other way to play is what we're currently holding is Amazon April 16, 2021, 3,300 call. Our MoneyPigTrading member entry price is 7.2. If by April 16 can went up to 34.33 Amazon stock price, we can potentially have 2,000% results, and correspondingly we can see 3,500 if Amazon can test all-time high, because once it's in the money, pretty much your contract will just be printing money, right? So that's just some trading ideas that I potentially can think of. At the end, we just want to highlight we have a really decent long-term investment program. In Discord in 2020, we have a really good winning rate and average return per trade. And we also have a swing trading program, which focuses heavily on options. And you can see throughout October to February, we have really decent winning rates and average return per trade. And if you haven't followed us on Twitter, YouTube, and Instagram, make sure to follow us on MoneyPigTrading. We also have Facebook, MoneyPigTrading as well. And if you are interested in our Discord community, please feel free to check out www.moneypigtrading.com. Thanks for watching. I'll see you next time. Bye-bye.